Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host The Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed to keep updated. So we have ourselves a bull market is what we want to keep thinking. And today that's coming more into question. So we're going to cover that off. There were 75 new highs since since the end of February, so Friday, Monday, Tuesday. And even though one of those days had a huge reversal in it, so I think the Dow swing was 600 points. Still lots of stocks making new highs, but what we want to stay focused on is the broader picture, because 80% of the stocks follow the broader picture. And if you're a short-term trader, that would matter. If you're a long-term trader, what you want to be aware of is, if we're about to start a big bear market, how would that look? And of course, I've mentioned it many times, but we're kind of in that situation in terms of the weekly charts. And so while we want to be optimistic when the market is going up, we still need to be aware of the possibility that this is the final high and it would roll over here. So we're going to talk about railroads and why industry group chart lists are important. And so I called the chart list railroads, but I've actually got transports in there. And the good news is within 20 or 25 charts, you can quickly get a gauge of the transportation index. And last week I talked about marijuana. Of course, they had a great day yesterday, and so always makes you wonder. But the important part, I want to make sure that this is well understood. So the important part was if you were going to short something, then or get out of something, you need to find a point to do that. And one of the things that happens in technical analysis is you find these inflection points, and it doesn't really show up in price earnings ratios, and it doesn't show up in book to sales ratios and all that kind of thing. But on a chart, it'll show up many times, places where the chart will either break out from or fail from. And so we want to use technical analysis to help us. And let's just say I'm wrong. Well, the idea would be that I could get out quickly with very little loss because I've obviously taken the wrong side of the trade. Anyway, I don't know that we'll get time to cover that off today, but I just want to mention that, if I'm wrong on marijuana and all of these stocks start to go up suddenly, the idea would be that you got into the trade at an important inflection point. Okay. So first of all, here's the update on the current market situation. This is a 10-minute chart, so it goes back to February 13th. And what you can see is we're already near 2-week lows. So very, market quickly changing. And what you'll notice on the PPO here is we've got this downtrend in momentum. Now, a 10-minute chart, who cares? But the idea of just understanding the swing. So we had this market surge up and then pull back, and then 2 attempts to try and push back up to the highs and failed. And on Monday, it was really quick. It was, literally market surged up on the open and then dropped all day for the most part, and then rallied back, call it a third or a half. And then on Tuesday, we basically traded sideways, and now we get back to this black line that was support and is now becoming resistance. Moving down to the daily, we can see the reason that we're having this problem, and that is the previous highs. So we want to stay attuned to that. Momentum indicators already rolled over, suggesting, maybe it's just a pullback to the 50-day. We don't really know. On a weekly chart, this is where the danger comes in. And what we see here is we have a left shoulder, we have a head, and then potentially a right shoulder. And it's not uncommon that the right shoulder has kind of a last gasp rally and then fails. You can see down in here, we had a last gasp rally, but it actually continued. So we don't know how that's going to resolve itself. But we have this downtrend in momentum, and the first dip below zero is the one that kind of gives you a clue that the next high could be a market top over a period of time. So again, on a weekly chart, your first dip below zero should add caution. And so if we were to roll over here, that would be concerning. And what we want to know is, does it just pull back and then take off to the upside, or does it pull back and actually start really becoming a bear market? And this is the point and figure view. And again, we've had this sudden surge, and a move into 25,367 would basically give us a new column of O's starting. So call it 25,350. Okay. The point I want to make overall is we have this Dow theory, and it's Dow Jones Industrial Average compared to the transports. And the industrial average that we currently hear on the news all the time is pretty manufactured. It has Apple, Microsoft, Bank of America, American Express, a whole bunch of stuff that have nothing to do with transports or industrials. So what we want to talk about is just specifying, getting down to the nitty gritty. And this is the industrials. And what we see here is the same sort of pattern that we saw on the overall indexes. And thus, one of the reasons to follow the chart is it is an important clue as to where the market might be going. So we can see we have a PPO sell signal on a daily chart, no big deal. If we go to the weekly, what we see here is we've had this high, a lower high, and now if we made a lower high here in momentum, this would be exactly what we would expect from a topping pattern. Is this final low barely gets above zero and then rolls over. So until the week is over, we won't know, but we're into Wednesday, and we're starting to make a lower high on the PPO. So that would be concerning. And then we'd want to watch the volume and see if it starts to accelerate. Now, next week is Quadruple Witching. And what that usually implies is that a high volume on Friday of next week. So the volume data will be skewed by that surge on options expiration. Okay, so the industrial average is all set up to fail if this was the place it was going to fail. It always has to get through this point, so that doesn't mean it will break through. It just means that it's a potential area of friction. And as technicians, again, you're not going to find that on the price to earnings ratio, but you might find it in the from a technical perspective, just the way the chart is laying out. So what I want to cover off today is just go look at the transports in general. What you see here is, so we have the same sort of pattern, but the transports, and again, the transportation average compared to the industrial average, to the industrial index or the industrial sector, what we want to watch for is if the two can't make new highs together, that would be a problem. And so here we got to the 200-day moving average, which you can see was very nicely defined by support at the 200. And now it's failing at the 200 for the last 3 or 4 instances. So a rollover here on the transports is kind of concerning, and we just need to be aware that we're at one of those risk points or inflection points. So what I've done is I've gone and I've looked through my railways and transportation industry chart list. And so again, they're all showing up under industrials, but as you can see within the sector, they're all different parts of the airline, railroad, trucking. And this is a wide enough cross section. There's more companies, but this is probably going to tell us exactly what we need to know. And so the idea would be, let's just quickly go through these charts, and we're not going to spend any time on each one of them. But in general, what is the trend? And clearly Union Pacific has the nicest looking chart because it recently made a new high, but it's been pulling back for the last 2 weeks in a very controlled pullback. We see that the PPO has rolled over, so that chart still looks good, nothing to complain about. Norfolk Southern has the potential to be a double top because it came up to the same level and has stalled there so far. And of course, it's rolled over. And there hasn't been a whole bunch of interest showing up for buyers here in the last 2 or 3 weeks. So that also adds a little bit of caution. Expeditors, you could just see 5 tops here all in the same place. If it was to stall, who knew? That wouldn't be a surprise. And here's Matson. And again, the same area, 39 to 42. And again, when we talk about tops in general, we're not talking about, the price gets to 4102 and then it goes from 4102 to 4103 and you've got a new high. We're talking about general ranges. And again, trying to get up through this friction level, call it 38 to 41, is a pretty important topping level. So anywhere in there would be considered kind of part of the top. CSX Corporation, we continue to have lower highs, but again, we're right up around the friction area. And on all of these charts, we're getting this momentum rollover. So here's Canadian National, and this one has got 5 tops in a similar area, but declining tops. Here's GATX, and what we can see, same thing, declining and struggling to get above the 200-day moving average. And I've sorted these charts based on scooter ranking, so that's why the charts are going to get progressively worse as we go. And here's Canadian Pacific with 4 different peaks declining. Kansas City Southern, basically a lot of friction around 113. We're sitting here at 112. Wouldn't be a surprise. So this would be a left shoulder, a head, and a right shoulder if that was how it was to evolve. So we're just paying attention to that one. No real signal. Here's UPS. We can see a series of declining highs over the past year. So that's a bit of a problem. C.H. Robinson, one of the largest trucking companies. And again, left shoulder, head, potentially a right shoulder stalling at the 200-day moving average. That's pretty much a textbook signature. United Continental, so this is an airline, but left shoulder, head, right shoulder. And again, on some of these, it's a year-long pattern. On some of these, it's 6 months. But if this was to fail here, this would make total sense. We would be fully aware of it. And one of the things, just if we click on this chart and just drew a trend line on relative strength, when railroads start underperforming or something starts underperforming, you want to be aware of it. And in this case, here's the United Continental starting to lose this relative strength. Okay, so going back, here's Landstar Systems. Again, the same sort of structure with a top. And here was the September peak. And it's important to notice this peaks, whatever, 1 week after September 1st. The market actually topped way over here. So sometimes these transports give you kind of advance notice. So here we are stalling around the 200-day moving average, right at kind of a level of a resistance, call it 115. So that would be important. Ryder Systems, they rent a lot of trucks and lease trucks out to companies, and this is putting in lower highs. I recently heard the Ryder guy on TV, and he was talking about, everything's going great, yet the chart disagrees. The investors don't agree with that synopsis, and they're making lower highs on that chart. Kirby is a marine freight company on the Mississippi and barge company, basically, and here we go with 6 lower highs. Delta Airlines living below the 200-day moving average now. Look at the PPO declining, can't even get above 0 anymore. That would be concerning. Southwest Airlines making lower highs. JB Hunt, huge trucking company. And you could see they kind of had the head and shoulders top a while back. So in this case, and maybe just draw this out. In this case, what we see here is you have this head and shoulders topping structure. And if we just took the parabolic function, and we have this top, you create a neckline, you pull back down, you come back up, and you test the neckline and fail. That is classic technical analysis. Everything on this chart just suggests being very, very cautious. And it takes us 30 seconds to recognize that in a picture. It's way harder to find that in a price earnings ratio calculation. So one of the things that this enables us to do is quickly analyze all of these companies without spending a whole bunch of time going through their financials, because the investors are doing that at the institutional level. So here we see JetBlue Airways and basically making lower highs and continues to. Alaska Air, trying to hold support here for 18 months. Pretty important level on that chart. American Airlines Group, this thing's been drifting lower for a long time, living below the 200 almost for a year now. FedEx Corp, this thing just keeps putting in lower highs. And so that was really quick. Now what we can do is just take one of these charts, and again, on the show, I want to make sure that you understand how to manipulate the charts very quickly. So I'm going to quickly go through. We're going to look at these same 22 charts just on a weekly chart basis. So we've got, this is American Airlines. It doesn't matter. You don't have to take the first chart in the list. You can take any chart in the list and say apply style to all. And when we do that, now we're going to go have a weekly look at these charts. So let's start at the top again. So again, best first. And what we see here, this chart still looks fine, but what we see on a weekly is lower momentum on each one of these highs. And the first dip below zero is a place, or at zero is a place to just be cautious that the next one could be the final high. So we have a pullback here, then the market, you know, spends some time going sideways a little bit and then surges. This is bull market behavior. Got it. What we have here is lower highs. And when these lower highs start to come in, at least be aware of the potential for things to break down. And market tops don't occur because things feel terrible. They occur because things are starting to weaken. And by the time it feels terrible, the stock market's already discounted it and will be looking to turn up when it feels terrible, not turn up when it just starts to get terrible. So here's Norfolk Southern, same thing, and we had this big dip below, and if we were to roll over with very little histogram strength here, this would be concerning. And again, not a lot of buyers showing up for work the last couple of weeks, so this is starting to lose its momentum off the lows already, and in this case, we're testing a double top. On the weekly chart is the one I think is most important, and what I want to do is just have a relative strength line drawn on these charts. And in this case, whatever, here's a year-long chart or a year-long trend line. I wouldn't want to see that get broken. Until it's broken, you know, everything is still fine. I think the problem would be if the Scooter ranking starts to underperform here, like it did back in 2014-15, that was a clue that things were changing. So if this starts to really underperform the market, that is, that's usually something that'll be a clue for us. Okay. So again, I'm trying to stay in the, well, let's go here. So I could either do view all, right? Just scrolling through 10 per page. There's another option called chart book that allows you to just click and flip. But here we have all of these tops, and you can see a breakout here to the upside, very, very bullish, no doubt about it. Conversely, if this started to roll over right here and right now, that would be a failed topping structure, and then it would break down. So it's that inflection point that we're looking at. And again, it's lining up the odds. What does it look like is going to happen? And so here's Matson, and again, this you can see how the topping structure occurred last time. And here you see the same sort of rolling over action where it looks like we're currently at a lower high and we've made lower lows. So we had a high, a lower low, a higher high, so indecision. At that point, we were building a megaphone. And then we pulled down and we make a lower low. And now if we stalled at the 200-day or the 40-week moving average and made a lower high, that would be like classic technical analysis telling us to really be careful. CSX Corp. So again, we've got lower highs coming in here. This is the first time the momentum has touched the zero level in over 2 years, almost 3. And if it rolled over right here, that would be exactly what we see. And you can see it back here in 2015, came down, got very close to zero, rallied up with almost no energy, basically had a 1-week surge, and then continued its decline all the way down. So here we've had this 8 or 9 week surge, been doing nothing for 3 or 4 weeks, stuck at the prior highs. So at this point, it's still concerning. And we did have a relative strength uptrend break here, so it's more concerning to me. Canadian National, relative strength is 6 months sideways. I can live with that, but I would prefer that it started to rally very, very soon. And here we have this dip, looks like a final high, comes down. And now if we roll over right at zero, again, this would be a very meaningful topping place. And you can go back and look when it died at zero here. This was a good place to at least heed the warning. Gatex Corp, GATX, same thing. Momentum is down to zero. trying to get back above it. And again, we're still on the first page of the transports, and we're finding a lot of PPO momentum right at 0 or below. So this is really starting to get worrisome. And you can see over here on CP Rail back in 2014-15, same sort of thing. And we're hovering right around the 40-week moving average. Just pay attention. It looks like it's ready to break to me. Kansas City Southern, again, really nice. You know, the chart's been consolidating for a year, and the question would be, has it got any ability to break out? And that's obviously what we'd want to see. The problem we have is it was below 0, bouncing up, and we're stuck right here at 0 right now. Could continue to rise higher, fully get that. My point would be if it rolls over right here, that's the exact sell signal I would be looking for. United Parcel Service, this is making lower highs on this weekly chart, and a rollover would be pretty important below 0. We haven't seen that in 4 or 5 years, so that would really be a concern for me. And I get it, their business is changing in Amazon and all that kind of stuff. The investors are fully aware of all of those risks. So here's C.H. Robinson Worldwide, and we see declining peaks. And again, just drawing a trend line right on this chart. Where would we expect the top to occur? It would be right here at the 0 line. This trend line fails right here, and that wouldn't be a place to get in. Now, if I go over here, I guess we had a short trend line here, but we also have this longer trend line where it starts to break out. And then, you know, it hasn't had a lot of momentum. This is pretty much sideways for 3 years. And then in here, it really goes on a super surge. So it's worth watching. But the problem I'm having is a lot of these charts are starting to roll over right now. And it's at a very critical place in terms of momentum. And it's in one of the key industry groups that we need to watch for clues to the economy. So here's United Continental. Again, making a lower high in momentum here on that. On a high in the market, and then a lower high here would be the right shoulder. I mean, this is textbook signature stuff of market topping. Okay, continue on. Landstar Systems, this one's making lower highs and lower lows and failing at the 200. PPO would be rolling over at 0, and it looks like last week the histogram was the same, and this week so far we put in a lower histogram. We've got a couple of days of work left. But if this was to roll over right here, you know, I think we'd all look in the mirror and go, gee, why couldn't I see that when it happened? And this is what had happened back here. So it's that first dip below 0 and the rally back up we want to be in tune with. And in this particular case, a lot of these charts are setting that up right now. So here's Rider Systems. The last peak was right at 0. And you can see what happens when the last peak is right at 0. Sometimes it really accelerates down from there. So you've got negative momentum on a weekly chart, and it just keeps breaking down. Now, Rider hasn't outperformed the market for 5 years, so let's not use it as a big template. But what we see here is, you know, without question, this used to be higher highs and higher lows, and now we're lower highs and lower lows. And so continuing to make this market topping structure would be a concern. I want to mention one thing just while we're on the subject. Jason Gopfert runs Sentiment Trader, and he posted a thing on the on Twitter yesterday, and in March 09, somebody announced the cheapest car ever, and I think it was Tata Motors or something at the time. But yesterday, Bugatti announced the most expensive car ever, and it was $19 or $21 million for the car. And you know, this week we'll have our 10th anniversary from the market lows of March 9th, 2009. So here we are, March 9th, 2019, and we'll just see. But anyway, it was quite a drastic comparison in personality. Anyway, this chart, I would say it looks more favorable. And the reason is because it's starting to break its downtrend, but we're stuck right at the 40-week moving average. PPO is below 0 and trying to roll over. It has all of the classic makings of a market top if it wanted to top here. Okay, so Delta Airlines, and you haven't made any money in this stock in 2 years. It's sideways. So the wiggles are actually pretty small. But look at this, is the first time momentum's been below 0 in 2 years. And if it rolled over right down here, that would probably be a bigger clue that things aren't getting any better. Southwest Airlines gently making lower highs and lower lows. And you know, these wiggles here, I think basically what it would say is trade it, don't invest in it. That's probably true for most airline stocks. But, you know, this resistance level 63, 66, 63, classic topping signature. We went below zero. Last was a final high, rolled over. Lots of clues in here. So here's JB Hunt. And what we see on this one is we've got a market climbing up here, really well off the lows. And then all of a sudden we're starting to break down, stuck at below the 200-day rally up and fail at the 200 or the 40-week moving average, textbook stuff, falling below zero, rallying back up, can't make a new high. This would be the place where we'd expect the final high to be in, and it looks like it was in 2 weeks ago already. We're below the 10-week and the 40-week. They're in bear market alignment, which means the 10-week is below the 40-week. So there's not a whole bunch here that I want to be too optimistic about. And look at what the relative strength was doing for the last 6 months, brief 2-month rally, and then fail again. No real surprise. So here's JetBlue. That one looks like it's getting bluer. And it's been below zero in momentum for almost a year. So nothing to get too excited about there. Alaska Air Group, we talked about this horizontal support and resistance level going back 15 months. Really goes back 3 or 4 years. So if this was going to start to break below 55, that's a pretty cautionary place, I think. And PPO is just turning down below zero. American Airlines Group, lower highs, lower lows, PPO below zero for almost a year. So if anything, what I would like here is this has got a kind of horizontal resistance level. And so if this started to change trend, started to make a higher low here, then I'd probably be much more interested. But until it makes that higher low, I think I'd stay away. FedEx Corp, I think we've all seen them on our driveway almost every day. So we're driving around our neighborhood every day. But what we see here is a lot lower, got to zero and had no strength. And that was really when the market broke down hard. And here we are again with somewhat of a rally, but nowhere near the 200 or the 40-week, and rolling back over. Full stochastic looks like it's going to roll over here again from a very low level. Normally you see it have a big sudden surge up. This can't even get surging up. So that's a very big concern here. I think this rolls over harder. And Union Pacific, same idea. So you get the idea that we're back to the beginning. And you get the idea of why we want to pay attention to these Union chart lists. So again, going to transportation on the daily here, we have this left shoulder, and if nothing else, supported by the 200, then we keep failing at the 200-day, and now it's starting to break down. So my interpretation of all of this is that the market is definitely fractured and definitely could break down from here meaningfully. And so this is a place to at least know where you'd leave a stock if you were going to. Thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. Thank you.